நம்மளோட டிமாண்ட் இருக்கிற மேட்டர்ஸ் கூட ரொம்ப இதெல்லாம் ரொம்ப போயாச்சு. 2002 20 வருஷம் புதுசா விளக்கு பூச்சி வருதுப்பா. வேற புதுசா எடுத்து வைக்கட்டுமா? சாலையில பூச்சி விழுறதுக்குள்ள போயிடணும்.
சார்ஜ் போட்டு
ஓட்ட போட்டு
Akash, Rohini, we'll wait for 1 or 2 minutes and then we'll start the class. Okay. Hello, am I audible? Can you hear me?
Yes, sir.
Okay, Rohit. Okay, last class we were seeing about Reserve Bank of India, RBI, and various functions of RBI we saw. That is, it acts as the apex monetary authority. Briefly, we saw the history also. It was established in 1935 by virtue of RBA Act of 1934. Okay, then again economic stability, controlling inflation. RBI is advisor to government. Then RBI guides other banks also. Okay, and foreign exchange, right? So preamble also we saw. We went to RBI's website also. Okay, issuer of currency. I told not only issuer of currency but also destroyer of currency. Okay, Brahma, Vishnu, and Shiva, all the three roles RBI is playing. Destruction of currency also happens, right? So, and excepting 1 rupee note and coins, all other currencies are printed by Government of India. Reserve Bank of India. Okay, coins and 1 rupee note is minted and printed by Government of India, not the RBI. Okay, then we also saw that it's a banker to the government. That is, all banking transactions happen through the RBI. So banker to government we saw, and also we saw what was agency bank. Okay, some of the functions of Reserve Bank of India have been delegated to an agency bank, which will perform the role what RBI is performing in some areas. Such banks are called agency banks. Okay, then issue of new loans, that is RBI bonds. Okay, RBI bonds are there. You can invest in RBI bonds. Okay, floating rate of interest it is offering, and it is 7.5%, 7 to 7.5% you get. So floating rate means when market rate comes down, this also comes down. Okay, RBI's interest yield also comes down. When the interest rate goes up, the payment of interest on RBI bonds also goes up. So like that it is. So it is directly following the market trajectory. Upward trajectory and downward trajectory gets reflected. Then of course you have T-bills. T-bills or treasury bills called. Whenever RBI, not RBI, on behalf of the government of India, RBI issues treasury bills. Treasury bills are normally short-term duration, 30 days, 60 days and 90 days, 120 days, like that it goes on, multiples of 30s. Okay. So in order to run the government smoothly, government requests lot of money, okay, for day-to-day expenses. So to raise a 30-day loan or a 60-day loan, you cannot approach the big term lending institutions. So you issue promissory note. Okay, pro note. They say no, pro note or a promissory note. Pro note government issues, and when government is issuing a pro note, it is called a treasury bill, T-bill, which is valid for 30 days, 60 days, 90 days, etc. It's a very good short-term investment. If you are having unused cash, huge amount of cash with you, and if you want to invest it for a very short period of time, say 30 days, 60 days and all, you can invest in this. Okay, treasury bill on behalf of the central government. Okay, liquidity gets increased, liquidity gets wiped out on a daily basis because of this T-bills being issued. Okay, then again, resource mobilization, credit, international finance. So many things which are related to government is controlled by Reserve Bank of India. Advisory services are controlled by Government of India. Then Bankers Bank also we saw, like as we discussed what is SLR and what is CRR. Okay, CRR is maintained with RBI. Okay, SLR is maintained with the same bank only, not with the RBI. 18% SLR, 4% CRR. So percentage of time and demand liabilities you have to maintain. Okay. To ensure that banks do not end up like Silicon Valley Bank or any other bank in the United States. Okay. So that is very important. Then also again just to recapitulate, foreign exchange reserves. Okay, foreign exchange reserves. So as I told you, there was an act called Foreign Exchange Regulation Act, FERA. Now this FERA has been replaced by another act which is called FEMA. FEMA. And these day-to-day fluctuations which happen in currencies or comes under FEMA, and FEMA is administered by Reserve Bank of India. Okay. For example, 85 rupees is equal to 1 US dollar. Okay. This rate is determined by Reserve Bank of India. Why Reserve Bank is interfering is again to have a check on export-import policy. Okay, export-import policy, or have a grip on international trade. So for that, FEMA, Foreign Exchange Management Act, is applicable. Okay. Then you have controller of credit. Controller of credit. So controller of credit, bank can play with the bank rate, then do open market operations. Then you have repo rate, and then you have reverse repo rate. So we saw what is repo rate, what is reverse repo rate and all. Repo rate is the rate at which banks borrow money from, RBI. That is called repo rate. Rate at which RBI borrows from banks, that is called reverse repo rate. Okay. So by getting into bank rate, which is a bill discounting rate, rediscounting of bills is called bank rate. Okay. Bank rate is a rediscounting rate based on which RBI functions. Then of course, other than quantitative measures like CRR, SLR and all, there is a method called qualitative method also. Suasion, it is called. Suasion, moral suasion. Or moral suasion means persuasion actually. Okay. See, say for example, if you want to take a loan in a bank, you go there, bank manager will ask you where you are working. If you say you are an advocate, will the bank manager give a loan? He will say, we don't give loan to advocates. I am from cinema industry. Will you give loan? I will not give loan. I am working in RTU. Definitely no automobile loan for you. These are called negativeness, negative profiles. Cinema actor, most negative profile is advocate, because once advocates takes loan, they have every mechanism not to pay, and then using some act, some provision, they can escape. Right. So advocates always are in the negativeness of any bank or any financial institutions. Then there are certain areas. North Chennai you have, North Madras. Lending money in North Madras is very risky. Right. Rowdy elements and other antisocial elements are more compared to normal people and compared to South Madras. Right. Worker area, people take drinks. Every day somebody is getting poked by a knife or something, right? Death is very common in North Chennai. Daily people fight, people take liquor, people, form gangs taking revenge on each other. So these are called negative areas. So what RBI does is, it sends out circulars saying that these type of customers you don't fund. What type of customers? Advocates, cinema actors and all. You restrict your exposure. During COVID situation, don't lend to MSME. They will fail. Don't give personal loan, or give it at a higher rate of interest. Ask for collateral security. So qualitative suggestions Reserve Bank of India will give. Every time to restrict bank, normally RBI doesn't play with the bank rate open market operation. That is quantitative measures what RBI is taking. You have qualitative measures also, where persuasive efforts are given. Okay, negative customer who has defaulted, then customer without proper guarantor, customer without collateral assets. Okay, financing a vehicle which has changed hands 4 or 5 times. Okay, so RTO brokers profile. So these are some of the profiles, areas, customer types, age group, etc., where you are not supposed to fund at normal rate. You must ask for extra guarantor, you must ask for co-borrower, you must ask for collateral security. Like this, they advise. If a bank consistently violates all these moral suasion activities sent by Reserve Bank of India, then Reserve Bank of India will issue a whip actually. They will forbid the bank from lending. They will ask them to stop lending business, go do collections and come back. All those things, right? Then RBI does promotional activities also. That is promoting banking habits. Okay, banking habits. So government itself has initiated steps under financial inclusion. Okay, financial inclusion where you can open a Jan Dhan account with any of the registered banks if you have an Aadhaar card and a registered mobile. So all three will be linked and all government payments, subsidies, freebies, okay, any incentive given by the government will go through bank account. You don't need to bribe people. That is very important. Then collection and publication of data. Okay, data, lending data, borrowing data, fluctuation of interest rates. Okay, this year, probably next month you will get the data. Okay, as of 31st March, what is the credit of take? How much of UPI payments have got? Digital money, how much of digital money has got exchanged? In fact, digital currency also RBI has introduced. Wallet, through wallet system, where instead of keeping cash in your pocket, you can keep it in a digital wallet, DigiLocker, and you can transfer cash, which is called digital cash actually. Okay, digital cash, right? This I had shared with the last batch. I'll share that also, the common group. Okay, then of course, so this is these are the major things what you have to know about the Reserve Bank of India and banking. Okay, then next we go to SEBI, Securities Exchange Board of India. Okay, the SEBI is an institution which has got separated from RBI. 1992, SEBI was established. Okay, so main area of control of SEBI is capital markets. Okay, capital markets. So which includes stock market. Okay, stock market. Then you have mutual funds. Okay, then in stock market you have shares, you have debentures, you have preference shares. Okay, you have bonds. Okay, so these are these are the products which are sold in a stock market. Then who are selling? Stockbrokers, participants. Okay, participants in the stock market are first one, companies whose shares are listed. Then you have buyers and sellers. You have. Then you have intermediaries. That is stockbrokers. Okay, and others, mutual funds and others who are interested directly or indirectly dealing with stock market. So all these people come under the control of SEBI. Okay, Securities and Exchange Board of India. So prior to SEBI being established, RBI itself was controlling the stock market also. Okay, since RBI has so many other activities to do, SEBI emerged in the market. Okay, right. Earlier, before SEBI came, there was an institution called Controller of Capital Issues. Okay, so all that is gone. Just like how Planning Commission is gone and Niti Aayog came, like the Controller of Capital Issues and the Capital Issues Act was abolished, means repealed. It became outdated, and SEBI, Securities Exchange Board of India, came into picture. Okay, so SEBI is managed by a lady actually. Right, so her name is, anybody? Rohini, do you know who is the chief of SEBI? As a girl, you must know, no? Any idea? Her name is Madhabi Puri Buj. Madhabi Puri Buj is the name of the person who is managing. Right. So SEBI has got its head office at Mumbai, and it is in Kurla, Bandra Kurla complex, BKC. Your CA Institute, no? You are doing CA Foundation. CA Institute also is located in Bandra Kurla complex only. Okay, Bandra Kurla complex. It is located, and SEBI is also located there. Head offices of various banks, financial institutions. It's a huge complex actually. BKCS, Bandra Kurla complex. Inside the complex itself, several kilometers of construction work. Then you have infrastructure, roads, companies, high-rise buildings. Most of the things what you see in commercial establishments like ICICI, okay, Axis Bank, and various other Bombay-based companies, Reliance Industries, everybody will have an office at BKC, Bandra Kurla complex. Okay. So it is near the airport also, very close to airport, very close to railway station. One side Bandra railway station, another side Kurla railway station. So from both direction you can have. Then SEBI has got its regional offices in 4 regions. Okay. So 4 regional offices SEBI has got. Then of course SEBI is also involved in training. Okay, educational institution is also there, which is called NISM, National Institute of Securities Management. NISM training programs are there regarding awareness of stock market, then advanced programs, practical programs, so many programs this institution conducts. Okay, so chairman is Madhavi Puri Buj, who is a government nominee. So all top appointments of SEBI are done by the government. Okay, so chairman, again based on ability, integrity, so many things are there. Okay, and it's really funny to know actually, read all this, because one of the former SEBI chairman has done fraud to such an extent that she is in jail actually, along with her colleagues. Stock market is a place where public money gets invested. Correct? No. So public money has to be safeguarded, and SEBI has to be number 1 in this, in safeguarding the assets. Okay. If SEBI's chairman itself is involved in a scam, no, you can only bang your head against the wall and you can cry. That's it. Former chairman of SEBI has been arrested. I mean, these things, name let us not get into. Okay, it's not right to mention names. Okay. So a person of integrity, normally a chartered accountant, they appoint as the chairman of SEBI with additional qualifications. Say MBA in finance. Okay. Then some acquaintance with law. Economics is very important, and balance sheet analysis, so many things. Say CA, and along with that, if a person has done CFA also, all the more better, because CFA is a course which is meant mainly for stock market only. Okay, but normally if you see, most of the top positions in SEBI are occupied by chartered accountants only. Okay, you need to be very strong in finance, accounts, law, capital markets. Okay, then 2 members from, okay, so first you have chairman and you have 2 members of SEBI from officials from the ministry, finance ministry. Okay, finance ministry and administration, dealing with finance and administration of Companies Act. Okay. So your institute, no, CA institute comes under Department of Ministry of Corporate Affairs. Okay, Ministry of Corporate Affairs. So somebody nominated by the ministry, central government, who is well versed in finance, that person will be one of the nominees. Just a minute, phone is ringing. Okay, yeah, right. Okay, what we were saying, two officials from central government, mainly from finance ministry, and who are very conversant with administration. Then of course one official by, and so these two members come from ministry. Okay, invariably it will be political appointments. If ministry is appointing, no, whoever is close to a particular minister gets a chance. Of course qualification also matters. See, there are so many qualified people in the ministry also. Correct? No. Our own Minister for Commerce, Piyush Goyal, he is a chartered accountant actually. Piyush Goyal is a chartered accountant. So he is a minister, he is in politics. Right? So there are politicians who are basically chartered accountants also, who are lawyers. Many politicians are lawyers. Right? IPS officers are there. Of course, idiots also are there. Let's not talk about that. Next one is another nominee by RBI, Reserve Bank of India, will have its nominee. Then you have full-time members, five members, okay, five members, again appointed by central government. Okay, since this is a central government organization, all appointments are done by central government only. The two top-notch people only gets posted. Unfortunately, they also get into scam. That is the problem. Go to Tihar jail, right, ruin their lives, ruin the life of investors, bring a bad name to the government, everything they do. And you know, I mean, the former chairman who was arrested for mismanagement, you will not believe what she said. She said a Himalayan yogi was advising her as to how to run SEBI. Right? Himalayan yogi. Yogi has got an email, Yogi has got this thing, I mean, WhatsApp, everything. Then they found out who this person was. Somebody who was sitting next to her was having a pseudonym or a pen name called Yogi, and she gave this answer to the CBI. Look at how courageous she must be, to give this kind of answer to Central Bureau of Investigation. Okay, so SEBI, again, you cannot say it is without corruption. Corruption exists everywhere. But government is trying its best. Ultimately, all are human beings. No, people get tempted. Some people get tempted by money. Some people get tempted by positions, power, and so many other things. Okay. So ultimately, any appointment in SEBI, no, person must be a chartered accountant or at least having a profession, any other professional degree. He must be having conversant with accountancy, conversant with law, conversant with administration, conversant with stock market. So these are, if you have all these qualifications now, then normally people will not join SEBI. They will have their own business. They make money in the stock market. But if you are not interested in going for employment, you can join SEBI also. Entrance exam is there. You have to go through the entrance exam and you can get selected. Okay. Then functions and responsibilities. See, functions and responsibilities, as I told you, is protecting the interest of investors. Investors' interest is very, very important, especially retail investors. Investors you can classify into foreign direct investors, foreign institutional investors, domestic institutional investors, Okay, so many kind of classifications are there. Okay, LIC is investing, mutual funds are investing, provident fund, office, PF office, they are, investing in some selected securities which are approved by government of India. So many investors are there in the market, and of course people like you and me who buy shares. Okay, either for the thrill of it or thinking that one day we have to become rich, so we will invest in shares. Okay, good shares you have to invest. Only then you will become rich. Otherwise, you will become a pauper, right? So knowledge is very important, even at your level. Okay, to protect the interest of investors. Then again, promote the development. Okay, development. Okay, one side development, and on the other side regulation. Regulated development. This is very important. Okay, regulated development. Regulated development means what? Development under the control of somebody, some knowledgeable person is called regulated development. Okay, see, yeah, you are seeing grass lawns. Okay, cricket stadium. It is played on. Cricket is played on grass. Okay, but the grass doesn't grow. The way it should grow. No, it is just 1 inch or 1.5 inch height. If it grows beyond that, what happens is using a lawn mower, they mow it down to ensure that the players are able to walk on it, run on it, the ball is able to go fast in the outfield. So many things are there. Cricket pitch. If there is grass on the cricket pitch, what will happen? Fast bowler will get maximum wickets. If there is no grass on the pitch and if it is just mud and clay, then spin bowling you have to adopt. Okay, there are so many things in cricket itself. So what you have to do here is, one is development. Develop the game of cricket, like that development, develop the securities market, and it has to be regulated. Uncontrolled development is malignant. It's like cancer. What is cancer? Any growth which is uncontrolled becomes cancer. Same way here also, uncontrolled growth should be avoided. If you have no control over growth, then what will happen is unscrupulous people will take the innocent people for a ride. Okay. Now, as I told you, there are three categories of people. So one is the person who issues the securities. Okay, it could be companies, it could be municipalities, it could be public sector undertaking, it could be a bank, it could be RBI, anything. Anybody could issue a security. Okay, their interest should be protected. For that, certain regulations are there which you have to follow. Certain disclosures you have to make. SEBI's norm on disclosures. Okay, then filing of prospectus. What the prospectus should contain, what information it should have. Okay, so the company in which I am working presently now, it is coming up with non-convertible debentures. Meeting with SEBI is going on, and our big bosses, directors, they are in touch with SEBI. Mostly it will open up after 15th of April. Okay, non-convertible debentures. So SEBI, people went to Mumbai, they had a discussion with SEBI. SEBI will send an auditor to inspect, or a team of auditors will come. RBI audit will happen. So many things SEBI and RBI are doing for the sake of protecting the investors. Still unscrupulous elements get into the system. That is the beauty of capital market. Then second one, as I told you, is investor. Okay. And third one is intermediary. Okay, intermediary. That is the stockbrokers, mutual funds and others who connect the household with the firm through the capital market. Okay, household and firm. Household is the savings generator. Household generates savings. Firm invests. How does the household and firm get connected? Intermediary is market. There is a platform which is called market, where savings and investments match. Who is enabling that? Brokers. Insurance, if you take. Directly buying an insurance policy is risky without taking advice. So LIC agents are there, mutual fund advisors are there, wealth managers are there, investment advisory companies are there, Bajaj Capital Market, integrated enterprises, so many are there, blue chip. These are companies which provide service to investors. They advise what to buy, what not to buy, when to sell. Okay. They ask so many questions. What is your goal, objective? Based on that, they prescribe financial products. Okay. So if you want to control all these guys now and secure these guys, protect the interest of these three guys, SEBI must have all kinds of powers. So SEBI should work like a court. SEBI should work like a police station. Right. SEBI should work like government legislative assembly. Okay. So first type of power what the SEBI has is called legislative powers. It is not fully legislative, it is quasi-legislative. Okay. Quasi-legislative powers. So SEBI has got powers to make rules and regulations, guidelines, issue circulars. Okay. Power to make law is with the legislature. Okay, I'll write it down so that glaring doesn't happen. Okay, so quasi-legislative power. Quasi-legislative power SEBI has got. Okay, power to make rules and regulations. Then you have quasi-judicial. Okay, quasi-judicial powers. So first SEBI is like a parliament, then SEBI is like a court also. Okay, so if any problem arises, SEBI can hear the case like how a court is hearing the case. Okay, so SEBI can hear the case, they can call for witnesses, they can call for evidences, they can listen to arguments, and then they can pass a verdict also. They can give a judgment or they can pass a verdict or pronounce a verdict. Pronounce a verdict or pronounce an order. Correct word is pronounce actually. Pronounced a verdict. So this power of SEBI, no, this comes under quasi-judicial power. Then third one is quasi-executive. Okay, quasi-executive power. Executive means to enforce discipline. If somebody is not disciplined, no, action has to be taken. Say for example, say our Akash is riding in a motorcycle. Signal is in red. He is already late to college by 5 minutes. Another 5 minutes late, he will lose his attendance for the first hour. So he jumps the signal. When the signal is in red itself, he jumps and goes. He will be caught by the policeman. And he will say, sir, please forgive me, I am late to college. Policeman will say, no, you have to either come to magistrate or you have to pay a fine as punitive. So Akash will pay 100 rupees fine or 200 rupees fine, whatever the officer is demanding. And since he is a commerce student, he will ask for a receipt. Officer will give a receipt also for it. Okay, challan. He will be challaned. This offense is called, he will be challaned for this offense. Means he is made to pay a fine. That is executive. So executive here is law enforcing agencies are called executives. Same thing SEBI also does. If you do not obey the circulars, rules, regulations and other things which are issued by SEBI, if you are not following the norms of SEBI, then it becomes a violation and SEBI can take action against you. This is very, very important. Okay. So three kinds of powers are there. So in the exam, what they can ask is, they will give a situation and they will ask, in this case, whether SEBI should act like a judiciary or a legislative or an executive. What kind of power SEBI should use? Like a case study, they might ask a question with 4 answers. So you must be very clear on your basics. Which is legislative? Making rules and regulations is legislative. What is judiciary? Passing rules and passing orders, rulings and orders, judgments. That is judiciary. Executive, taking people for task. How do they take people for task? They conduct surprise audit, investigations. Okay, if anything undesirable comes out in this investigation or audit, then you will have to face the executive action by SEBI. Okay. Then powers of SEBI, again to make law for stock markets. Then next one is mutual funds. Mutual fund also comes under stock exchange. Okay. Then periodical returns will have to be filed. Okay, periodical returns have to be filed. Then stock market or stock exchange, NSE and BSE are controlled by SEBI. They have to follow the rules and regulations. Then all stockbrokers, wealth managers, investment advisors, and anybody who is dealing with money and stock market will have to go by that. And of course, if you want to get yourself educated on stock market, you can go to NISM, National Institute of Securities Management, NISM website. You have self-study, then you have, interactive study. So many courses are there, which you can, fees is very nominal, 1,500 to 2,000 rupees. If you pay, study material will come to you through mail. You can download it from the website. Hall ticket also comes in the website, download it, read well, write the examination and come. Okay, so that's it, right? So these are taken because investors should not lose their confidence in the stock market. Stock market is the barometer of economic development of the country. If you see United States, if you see other countries, stock markets are behaving in the adverse way. Whereas in India, what happens is, even if stock market is falling due to this Adani and other issues, somehow government is managing to set it right. Okay, now it is trading at 57,000 and odd. It touched even 61, 62. 3 to 4,000 points down it is now. But what will happen is, somehow government of India is managing this growth. Economic growth is happening. Investments are happening. Productivity is increasing, which is not happening in any country. Of course, except in China, right? US is down, UK is down, Europe is down. Everywhere recession is there. Whereas Indian markets are resilient. That is the reason why, even if the market is falling, it again rises. Okay. So it happens. So today is Saturday. Yesterday markets were up by 1,000 points. Next week we have to see, depending upon the news. Okay. Next we go to Competition Commission of India. Competition Commission of India, or CCI it is called. Okay. CCI means, what CCI does is implementation of Competition Act. Competition Act of 2002 and amended from time to time. Okay, 2002 Competition Act. Okay, so implementation is with this. NCLT, Implementation of Companies Act. Okay, then IBBI, Insolvency and Bankruptcy Board of India, administering Bankruptcy Act. So for every act to get administered properly, there is an institution also which the government is creating. Okay, so this Competition Act, it is being implemented by Competition Commission of India. Okay, so first objective of Competition Commission of India is to ensure that there is healthy competition and there is no unhealthy competition in the market. Okay, so I'll just write down point by point. Okay, it may be there in your study notes also. You can go through it. Right. So first one is prevention of effects of or adverse effects due to unhealthy competition. Okay, unhealthy competition. Unhealthy competition means where people are using unethical means to gain advantage over the market. Okay. Normally, if you take this competitive market, competitive market, you have Pepsi competing with Coke. Then there are local brands also. Okay, some of you must have taken this. There is a drink called Torino. Okay. Now Campa is coming back. Reliance is promoting Campa back. Then many of you would have drunk this one, Bovonto. Okay. So these Torino, then Bovonto, Trio, these are all manufactured by a company called Kalimark, Tamil Nadu based company. So they have some rural markets under their control. Bovonto is going well in the market and they are able to challenge even Pepsi and Coke. Okay, beyond Tamil Nadu, nobody knows about this drink, Bovonto. Okay, then same way you have like Nutramul is there, then you have Bonvita. Quality ice cream is there, some other brand ice cream will be there. So there is always competition. Burger King, Pizza Hut, India Cements, you have Shankar Cements, then you have Ultratech Cement. So many cement companies are there. So any product you take now, there should be competition in the market because our economy is a competitive economy as well as some areas are still with the government. Okay. Then at local level, if you see, hotel Arya Bhavan, Hotel Sangeeta. Okay. Mohan Bhavan, Manoj Bhavan Hotel is competing with Sangeeta Hotel. Right. Then Sarona Bhavan is there in the city. Now they are slowly losing their hold on the market. Almost lost, we can say. They are out of the competition market. Okay. So, fair competition means there must be more players in the market. Okay. Any cosmetics, you should not think only about Hindustan Lever. You must have Procter and Gamble also. Right. Sweets, Nestle, Cadbury's, Parry. So many sweet companies are there. Dairy products, Hatson, Vijaya. Then you have our own Avin in Tamil Nadu. Okay. In Kerala, it may be called by some other name. Okay. Like this, it goes on. Okay. In Andhra, it is called Vijaya. Okay. In Karnataka, it is called Nandini. Kerala, I don't know what it is called. Okay. So, products are there. Customers should be given choices. If you don't give a choice, or if you enter into an agreement where secretly you decide the prices and break this competition and get into what is called cartel. Okay, cartel. Cement is famous for cartel. India Cements decides the price normally, which others follow. So many cartel industries are there. Pharmaceutical, there is cartel. Real estate, there is cartel. So cartel means unauthorized group who are bent upon doing wrong things, defeating the policy of competition. That is called cartel. Okay. So there must be somebody to encourage competition. Okay, encouraging competition increases efficiency. Production efficiency will improve. You have to compete in the market. Why India is not able to make even a single mobile phone and sell in the market? Micromax came, Carbon came, so many names came at one point of time. Not a single cell phone player who is based out of India is able to sell even a single phone. Everybody prefers Samsung. Rich people prefer iPhone. Okay. Middle class, lower middle class prefer Chinese makes. MI, GIMI, so many other things are there now, which comes with lot of features. Has any Indian company manufactured a single mobile phone with at least 10% of these features? Nobody. Right. So competition is wiped out. So healthy competition makes the fit to survive. Survival of the fittest. How does the fit survive? By making quality products. Okay. Again, coming to local example. Okay, local example. There was a time when doctors used to say to patients, sir, you are not supposed to have food in a hotel until you recover. Supposing there is any emergency and if you are forced to have food outside, please have only in Saravana Bhavan. So doctors used to recommend. Now what has happened? So many hotels have come out with the name Saravana Bhavan, Sri Saravana Bhavan, Rich Saravana Bhavan, this Saravana Bhavan, that Saravana Bhavan, killed the main hotel. Okay. Then competition punishes the laggards. Laggards means people who are running behind. 1500 meters dash if you see now. Some people will be leading, some people will be lagging behind. Not lacking, lagging actually. Lagging behind. Okay. He is lacking, means he is lagging behind. L-A-G is the correct spelling and not L-A-C-K-I-N-G. Lacking means kurepaadu. Lagging means pintangi irukathu. They are bothered about pintangi irukathu, not kurepaadu. Okay. So, punishes the laggards. Laggards are thrown out of the market. Reduces costs. Market capture பண்றதுக்கு manufacturing quality product is one of the best ways. And availability of abundance of goods, that is choice. Choice is given to the consumer. Okay, wherever choice is not given or the products which are manufactured are under the control of 2 or 3 companies, like in oligopoly market, then Competition Act comes into the picture. Okay, so prevent unethical practices. Then promote, next one is promote healthy competition. Promote healthy competition. What is healthy competition? Where there is transparency. Where there is transparency of what is happening in an organization. That is the one. Okay, sustain competition. Then again, freedom of trade. Freedom of trade. People should enter the market freely and they must be allowed to exit the market also freely. Entering and exiting the market freely. Okay. This happens only in monopolistic and in perfect competition. Okay. Oligopoly, what happens is there is cartel. So this Competition Act talks about oligopoly market. Oligopoly market is telecom market, credit card market, payment gateways. All these things come under oligopoly. So under oligopoly, entry and exit is difficult. Entry is very, very difficult because huge investments and existing players who have invested more money, they will not allow others to come into the market. Okay. Then of course, protecting the interest of the consumer ultimately. Customer is the king. Consumer protection against unfair trade practices. Okay. If you want to see the history of this competition commission, you have to go back to 1969. 1969, there was an act which was called the MRTP Act, Monopolies and Restrictive Trade Practices Act. This was the first step which was taken by the government to prevent unhealthy trade practices and monopolies in the market. Later on, what happened was, Government of India felt that after all these years, Monopoly and Restrictive Trade Practices Act, MRTP Act, needs to be repealed, and in its place a new act has to come. Just like how you had Companies Act of 1956 and the Companies Act of 2030, New Companies Act, like that MRTP Act was repealed, and in its place Competition Act was passed, and there was a institution called MRTP Commission. Okay, MRTP Commission also was dissolved, and in its place Competition Commission of India has come. Okay, it consists of a chairman and 6 members, okay, who are appointed by the central government. Okay, so adverse effect of competition and various other undesirable activity which take away healthy competition. To eliminate such practices, Competition Commission of India has been established, okay, to prevent practices of adverse competition, sustain competition in the market, interest of the customer, interest of the trader. So all are protected by this act. Okay, Competition Commission of India, which implements Competition Act of 2002. Okay, then we come to the next institution, that is IRDAI. This is slightly different. Okay, so banking we saw, stock market we saw, then we saw Competition Commission of India. Now we will be seeing IRDAI, Insurance Regulatory and Development Authority of India. Okay, IRDAI was established under the IRDAI Act of 1999. Okay, this act is, this institution IRDAI is only meant for insurance sector. Insurance sector. See, there are 2 types of insurances. One is called, which you all know, life insurance, and the other one is called non-life insurance. Okay, non-life insurance. Life insurance company, you know at least one company, LIC, which does life insurance business. Non-life insurance is done by non-life insurance companies. Government companies are there. United India Insurance, Oriental Insurance, National Insurance, New India Assurance. These are government companies. Then you have ICICI Lombard. Then you have HDFC Ergo. So both in life and both in non-life, you have government companies as well as private companies also come. So whether it's a government company or whether it is a private company, okay, all are governed by IRDAI, okay, Insurance Regulatory Development Authority of India. Okay. Now, you must know something about Malhotra Commission. Okay, Malhotra Commission. Malhotra Commission was established for the purpose of allowing private players into insurance. Okay, 1992-93, Malhotra Commission was set up. This purpose of this Malhotra Commission is to explore the possibility of admitting private sector in insurance companies and to make even government companies into private companies. Making government into private companies also comes under the objective of Malhotra Commission. Okay, so today we are having lot of private insurance companies because of the recommendation made by Malhotra Commission. So starting from 1999-2000 onwards, government monopoly on non-life insurance and life insurance ended, and foreign companies, Indian companies with foreign collaboration, and companies which are Indian in origin, SBI life insurance, SBI general insurance, all these things, all these companies started coming into the market. Okay, then in order to encourage foreign investments into insurance sector, the limit, that is foreign direct investment, FDI, in insurance sector has been increased to 74%. Your book will give a different figure which is wrong. Up to 74% you can insure foreign direct investment. It is given 49% in your book which is wrong. Up to 71%, up to 74% foreign direct investment can be made in insurance sector. Starting an insurance company. Suppose you are starting insurance service like third party administrator, then evaluator company, insurance broker. Okay, brokers are very important in insurance. Okay, they represent the customer to various insurance companies, and their job is to get the best possible insurance cover. See, in insurance service, that is brokers, especially insurance brokers, IRDA has 100%. 100% foreign direct investment can be made. Okay, this is the latest update actually. 74% directly into insurance company and 100% in services which are related to insurance. Okay. So what IRDA does is, again IRDA is the supervisor. Instead of protecting the interest of customers or investors, they use a different name in insurance, protecting the interest of policy holders. Okay, policy holders. Insurance policy is a contract. Okay, any agreement enforceable in a court of law is called a contract. Okay, insurance is a contract. What that contract says? Offer and acceptance. Insurance company gives an offer, invitation to offer, and the client comes with an offer saying that I intend to insure my property or life or something. Then there will be offer and acceptance. Whether the person is a minor, major, is he lunatic, is he an idiot, is he a drunkard. So what all things are applicable to a valid contract? No. Essential features of a valid contract are applicable to insurance also. Apart from that, there are other conditions: insurable interest, indemnity, subrogation, contribution. Very peculiar kind of business this is, insurance business. Okay. And the agreement between insurance company and the customer, that is the policy holder or the insured, it is called insurer and insured, that is put in writing and it is typed out and given in the form of a contract. That is, it is stamped. Stamping is done. Okay, as per the government rules, it is signed by the insurer. Okay, that he is got the consideration for the contract, which is called premium. Insurance premium is paid regularly. If the insurance premium is paid regularly and if all the policy conditions are adhered to, then any loss suffered by policy holder will be indemnified by the insurance company. So this is basically the contract, insurance contract. So all policy holders should be given a fair treatment. See, when the customer comes for insurance business, it is income for the insurance company. So with a smiling face, he will be called inside, all terms and conditions will be explained and premium will be collected. So while collecting premium, you show a very nice smiley. Okay, nice smiley, what you send in your mobile phone in WhatsApp, that kind of a smiley. will be shown by insurance company people. Suppose some eventuality happens and you go and say that I have suffered a loss, please pay me. Then you will find a red color angry emoji in the face of people. That should not happen. See, if the insured has followed the principles and the guidances issued by insurance company, then the claim has to be paid. Insurance claim has to be paid. No other way. Okay. So while collecting money, you are giving a fair treatment. When it comes for claim, you show your true colors. That is not right actually. Okay. Then orderly growth of the insurance company, especially annuity and superannuation payments. See, annuity, I'll explain what it is. Annuity means a series of payments. Series of payments which LIC or any other insurance companies will be making. Okay. Normally this comes annuity policy. Example I will give you. Jeevan Suraksha. Jeevan Suraksha is a pension type of policy. Pension policy it is. So you keep paying premium till you retire. Once you retire, what will happen is series of outflows will happen. So till your death, you will get pension, and after your death, the principal amount will be repaid to your spouse. Okay, this is how Jeevan Suraksha policy of LIC works actually. Okay, it's a pension plan. So annuity and superannuation payment. Superannuation means retirement. When a person is retiring, what will happen is his income takes a hit. His family will not have the same level of income what was there earlier. Okay. So you need to be very, very careful because these policies are designed for the purpose of common man, especially this Jeevan Suraksha policy, where what happens is you keep collecting premium till retirement, and once he is retired, you start paying him pension. So many families depend on pension, what they get from insurance company. Okay. Then insurance is a business there can be lot of malpractices. Okay. So wherever there is money, there can be malpractices. Somebody from the insurance company will say, like, I will pass your claim. Okay. If you make a claim for 1 lakh of rupees, official will say, yes, you will get 1 lakh. You please give me a cut of 10,000 rupees. So integrity is lost. If you don't pay, I will say some reason and reject your claims. This happens. Okay. So this is something which is undesirable, integrity. Right. Then raising bogus claims. There are cases where dead bodies are thrown on the road and a lorry is made to run over it, and motor accident claims are artificially stage managed. Okay. So many of you will be going into insurance industry also for audit and other things. You will find that you can do a PhD in fraud when it comes to an insurance company. Okay. So insurance companies, they deal with people, they deal with truck owners, they deal with car owners. Everywhere insurance company collects money and pays money. While collecting money, no problem. While paying money, integrity becomes a question because you are having a person who desperately needs money. Desperately, my truck was burnt by a mob. Without the truck, my family cannot survive. My income comes from the truck. Okay, I will give the claim. 25% you please share it with me. These are integrity issues. Okay. So fair dealings and this thing. Then speedy settlement of claims. This is very important. People run from pillar to post in the insurance company. They'll say, come tomorrow. Manager is on leave. Your claim is under process. And they will not tell in one go how many documents are pending. Today they will say X, document X is pending. Come back after 15 days. 15 days they will say another document, birth certificate, birth certificate. Then proof of residence. They will not tell all these things in one go. They will tell these in different points of time. Just to delay the claim, irritate, and ultimately the person will say, please do something. Then this unofficial matter starts. See, when documents are perfect, within 3 days, 4 days, insurance company will have to settle the claim. See, that is why this new section 45 has come. Section 45 is very popular now. What section 45 of the Insurance Act says is, in life insurance, if a customer has paid premium for 3 years continuously, you cannot reject any claim from his side saying that he is doing fraud. 3 years you are given time to find out whether customer is doing fraud or not, or customer has given wrong information. If a customer pays premium regularly and if there is no issue for 3 years, then you cannot stop a claim from being processed. With an iron hand, government crushed this integrity related issues. Still people make money. Okay, there are lawyers whom I know. Every morning what they do is they go to police station and they will find out இன்னைக்கு எத்தனை பேர் செத்து போயிருக்காங்க ஆக்சிடென்ட்ல. They will get the list from all the police stations. They will go to each house and they will wait. Dead body பக்கத்துல இவங்க நின்னுப்பான் advocate. You will say நான் claim வாங்கி தரேன். Okay, 20% cut and கொடுத்தா போதும், I will get the claim passed. My wife is working in insurance company. Right? See, you are all very young children. You do not know what kind of wolves and jackals are there outside. Once you are out of your studies and into your career, you will get to know. And as chartered accountants, you have to catch hold of them, bring it to the notice of the government, and ensure that they follow the rules. That is very important. Then transparency in conducting business. Right? Then action taken where standards are ineffectively enforced. Government has come down very heavily on insurance sector. Okay, and optimum self-regulation also. Okay, and there is a saying in Tamil, no, திருடனாய் பார்த்து திருந்தாவிட்டால் திருட்டை நிறுத்த முடியாது. A song in an old MGR movie, which is valid even today. Self-regulation exactly talks about this only. Unless the thief decides to become good, he will not become good. You counsel him, you talk to him, you shout at him, nothing will work. Okay, so section 14 of IRDAI Act gives the various regulations. Okay, so subject to the provisions of this act, IRDAI shall have the duty to regulate, promote and ensure orderly growth. Same just like SEBI, regulate, okay, promote and ensure orderly growth. What applies to SEBI? No, same thing. I want to promote and regulate orderly growth. Exactly the same principle what SEBI is following, same thing IRDAI is also following. Okay, so IRDAI deals with insurance and reinsurance business. Okay, reinsurance means insurance company itself insuring with another insurance company. Okay, which is called the reinsurance company. In India, there is only one reinsurance company called GIC Re. Government run company it is. Okay, GIC Re is the only reinsurance company in India. All others are insurance companies only. Life insurance, non-life insurance, with public sector, private sector, everything is there. Okay, reinsurance company is just one company only. Okay, so the powers of IRDAI include, again, issuing certificate of registration, then protecting the interests of policy holders. Okay, especially when it comes to settlement of claims. Okay, claim settlement is one. Then there is something called surrender in insurance. Okay, this is another huge, this is an ocean actually, insurances. Surrender means if you have paid premium for 3 years now on your insurance policy, you can surrender it and you can get back the premium paid. Some portion will be withheld by the insurance company because you are breaking the contract. You take a 20-year policy. Minimum 3 years you should have paid the premium. Only then the policy will reach cash value. So whichever policy has reached cash value now, it can be cancelled and or cancelled means surrendered and it can be refunded subject to some penalty. Okay. So surrender is also another thing. Okay. So surrender is one place where insurance company official can take bribe and the other one is settlement of claims. Okay. Then code of conduct for COC, code of conduct for valuators and surveyors. Okay. These people are very important. SUR surveyors spelling is wrong. SURVEYORS. Surveyors. Surveyor is the person who does loss assessment. Say for example, say Mithun's motorcycle. Okay, he has given it to his friend and the friend bangs the vehicle against the wall or something. Okay, how much is the loss suffered by Mithun? So for that, a valuator will come from the insurance company and he will figure out what is the damage to mechanical parts, mirror, plastic items, and he will make a valuation. And then he will call Mithun privately and say, if you take care of me, I will get this claim passed soon. This is unethical. Okay, this is unethical conduct which many of the surveyors do, loss assessors do. Another person who gets involved in this is TPA, third party administrator. Third party administrator and hospitals, they have a tie-up. Hospitals will inflate the bill. Unwanted treatments, medicines and other things they will prescribe and inflate the bill. Third party administrator, they have a tie-up with the hospital. They will pass part of it. They will ask the patient to bear a portion of it. Okay, again integrity issues come there. Okay, Mediclaim insurance, you have this third party administrators. Okay, then professional organizations connected with reinsurance business, that is surveyors, valuators, brokers, agents and others. They have a code of conduct. Okay, then IRDA also calls for information, that is returns. You have to file returns giving information of how much premium you collected, vertical wise, okay, policy type wise, what is the claim data you are having, how many fire claims, how many marine insurance claim, okay, then whether insurance company is maintaining proper accounts, do they have enough funds, is this insurance company solvent, will they become insolvent and become like Silicon Valley Bank. Insurance company is very dangerous undertaking because one loss is enough to send the insurance company packing. Okay, so they have to manage their portfolio very well. That is, insurance is basically part of risk management. Okay, risk management, how well the insurance company is able to manage the risk, that is very important. Okay, for this periodic audits are conducted. Okay, and if any discrepancy is noticed, action is taken. Okay, action is taken. Then of course, rewarding insurance companies who have done good business using transparent methodology and with fairness. Best insurance company, IRDA certified. Okay, same way insurance agents have to clear the IRDA exam. Without clearing IRDA exam, insurance company will not pay commission to insurance agents. Okay. So IRDA also has exams. Like how SEBI is having exam, IRDA has an exam. You have to compulsorily undergo 100 hours of training. Personal, not online also. Go to their sales office and undergo training. Right. Then you have internet training also, online exam also you have to clear. Then only you will be given license if you want to become an LIC agent or non-life insurance agent. Okay. So then one more thing, ensuring that these agents explain all the terms and conditions of the policy. That is very important. Otherwise, what will happen is, if terms and conditions are not explained, litigation will happen. Right? Litigation will happen and bring a bad name to the insurance companies. Okay. Whether the insurance company is doing periodic audit. Okay. Is there any, how many claims are pending for more than 15 days, more than 30 days, more than 60 days? Okay, 4 years, 5 years. How many have gone to the court? How many are settled? Such cases are also taken, and claims where you can resolve through mediation, they do through Lok Adalat. Okay, Lok Adalat they conduct, and what happens is insurance company representative and the customer representative, they meet, they agree upon, and without prolonging litigation, the court case gets resolved. Out of court settlement, they say no, it is something like that. Okay. Then IRDA also controls the commission which you are paying to insurance agents. Right. That must also be disclosed. This is what the latest rule says. It's not there in the book. Okay. But IRDA is planning to bring out a rule saying how much commission the agent is earning on the premium they are paying. That also should be transparent. The customer should get to know. Okay. To that level, they are into this. Okay. Then for life insurance, certain terms and conditions. Non-life insurance, certain terms and conditions. Right. Then there are certain insurances which are governed by tariff. Okay. Tariff means rules and regulations which are published by the government through a committee which is called Tariff Advisory Committee. Tariff Advisory Committee prescribes how much premium you have to charge, what all conditions you have to follow. Okay. Complete guidelines. It is an operational manual for insurance companies. Okay. For example, if you take car insurance, car insurance has got two sections. One is vehicle premium. Vehicle premium, vehicle insurance will be there. Then the other one is third party insurance. Okay. Third party insurance is compulsory. Without third party insurance, you are not supposed to bring your vehicle on the road. Spot fine 1,000 rupees if you are caught by the policeman. Okay. So third party insurance comes under government control and tariff advisory committee. Okay. Tariff is nothing but a book which contains guidelines. Okay. Which contains guidelines as to how certain insurances have to be conducted. So whatever insurance business comes under tariff, you have to go by the tariff premium only. You should not charge your own premium. You have to go by the rates, terms and conditions which are given in that book which is called insurance tariff. Okay. So if you violate that, you are violating government norms. Right. Then how much of reserve insurance company is having? Because insurance is very big business. So normally, of course, you will study insurance accounts also. Okay, out of the total premium, how much you have to keep it as reserve for future? Fire insurance, it is 50%. Marine insurance, it is 100%. Okay, these are all things which everybody will have to follow. Then insurance companies will have to build up reserves also. reserves for unforeseen expenses, unexpired risks. Okay, it's a very complicated kind of business, and the language itself, what we speak, will be slightly different. It will not be like language what lawyer speaks, or this thing what we use under company law or what we use under Negotiable Instruments Act. This is a separate cup of tea, insurance businesses. Okay, so tariff advisory committee law you have to obey. Creation of reserves. Okay, if you are rejecting a claim, you must inform the customer as to why you are rejecting it. That is also very important. Okay, so IRDA basically acts as a facilitator between the insurance company and the insured. Then you have insurance company, insurance disputes can also go to insurance ombudsman. Insurance ombudsman, like how banking you have an ombudsman who decides, seeing the merit of the case. Insurance ombudsman is also there. He is like an umpire. Okay. Cricket, you have an umpire, no, third umpire, second umpire, like that. Ombudsman is the camera, third umpire who watches. So anything going wrong, you can escalate it to ombudsman. And insurance companies should display the name, telephone number, email address, and physical address of the office of the insurance ombudsman. Okay, so that is one. And the reserve you have, reserve for unforeseen risk, reserve for unexpired risk, and so many other reserves which an insurance company will have to build up. Otherwise, what will happen is, if a fire breaks out or if an earthquake happens and 100 customers come with claim, your insurance company is wiped out. So you must be very prudent. Most of the insurance companies, they employ chartered accountants because they are very good at analyzing the balance sheet, doing risk analysis, how to invest properly, okay, how much of reserves you have to build up, how much provisions you must maintain for losses which are imminent and absolute. So for all these things, one industry where chartered accountants are of great help is this insurance industry, where you need knowledge as well as your investigation capabilities also. Okay, so these are some of the areas which you have to know about insurance business. Okay, so in your book he has given a summary also, table 1, about RBI, about SEBI, about Competition Commission, about IRDAI. Okay, for examination point of view and easy understanding, you can go through that table also. Okay, so in the next class we will finish this chapter. We will do this NABARD, funding institutions, development banks. He has talked about NABARD only. Okay, he has not talked about IFCA or SIDBA or anything. Only this he has focused upon, right? ICICA and other things he is not mentioned. So in the next class, what we will do is we will see NABARD in detail and we will close this chapter. Okay. Tomorrow no class. Maybe on Monday or Tuesday we will meet. So today in 1.5 hours I am concluding this session. Okay. Thank you. Take care. Bye.
Thank you, sir.
Thank you, ma'am.